focus very heavily on the spend plan for 2022 so that you guys are well aware of it as we present it for approval at the annual meeting, which happens next week. So again, please hold your questions, jot them down if you want to, and we will also have a printed copy of this available after the presentation. So I'm going to turn it over to Mary to do her portion of this, and then we'll have Dan present for the property committee.
Good morning. For those of you that don't know me, I don't think there's too many of you. I've been around 50 years, but that doesn't mean too much. I'm celebrating my 50th anniversary here, and that's been a pretty good year for me. My name is Mary Jeck, and I am the financial administrator here. That means I pay the bills. So we're going to review first the year past. We started the year on a high note with an operating fund balance of over $36,000. I want to just comment briefly on that. In 2020, we took out a PPP loan from the government. That was a small business loan, and that was used to pay the salaries in May and June of 2020. And because we didn't have to use money from the general fund, that allowed us to have this carryover into the new year 2021. Had we not had that, we would not have ended in the black. Monthly income, this is a very normal pattern for us. If you look year to year to year to year, this is what it looks like. I wouldn't even have to have the years down there, or the months down there. Every year, if I were to graph it out, it's going to look like this. Income is up and down, and the expenses are pretty constant. Operating expenses were about $16,000 more than in 2020. That's kind of a given. We have salary increases. We had slight salary increases. We had a few expenses dealing with having an intern. And I don't know about you, but I just looked at my gas bill. The gas bill at the church, or the XL, gas and electric bill at the church, went up $1,000 from November to December. We ended the year just over $13,000 in the black, so we're still in the black thanks to the PPP loan that we had 2 years ago. And for those of you that are numbers people, this is your screen, and I'm sure that's about 1% of you. At the top we have just average income. Notice the average income and expense. It's always more expense than income, it seems, but we still seem to make it work. Then we have operating and overall income. The difference between those two is that overall operating income is what we used to call the general fund. And overall income includes memorials, special gifts, anything that isn't part of paying bills and operating. So then the next section is operating expenses. Then I added capital expenses. I didn't put capital income in there because this year whatever came in as income was paid out in the mortgage. So the income and the expenses were the same there. And then we have the cash at the bank. We have two accounts. We have one at Bremer, that's our operating fund, and we have Citizens Alliance, which is our capital appeal money. So the big question, what does a 22 spending plan look like? It looks considerably different than in the past, not only in name, but in content. You'll notice I'm not using the word budget. And this is a personal thing for me. For me, a budget is when you have a set of money and you're deciding how to spend it. A spending plan is how we would like to spend money for our ministries. And we're hoping that the congregation provides enough money for us to do that. So that's just kind of a personal thing with me, but the finance committee said, yeah, go ahead and use spending plan instead of budget. So this is what we spend our money on. Now, I don't want to say that the right column or the left column is more important. Our mission is the right column. Our ministry is what we do here. But in order to do that, we have to have the money to do it, and that's the left column. And just, I put these out so you can see what the different ministries are, and then what the committees. The committees are on the left, and the ministry teams are on the right. So with ministry teams ever changing and costs going up, we proposed a plan, and this is property, finance, and the council. We've all looked at this. We've all been talking about it for months. And just a comment here, ministry teams haven't really been functioning very much past 2 years. And so in developing a spending plan, I didn't know where to go. Who do I talk to for adult ministry? I don't know. Who do I talk to for social ministry or hospitality? Those committees and ministry teams just haven't been functioning like they used to. So we came up with these things as our justification for the spending plan. Slight increases in salaries and increasing Hannah Russell's hours. A minor increase in the property tax, we already know that's going to happen. You'll probably see it too if you live in Watertown or Carver County. Significant increases for the property line just because of fuel costs, electricity, maintenance contracts. If we have a maintenance contract with somebody who has to bring a truck out and they're going to have fuel costs, they're going to pass those on to us. So property is going to have significant increases. There's going to be minor increases in things like postage, bank expenses, the little things that shipping, if we have to pay shipping on something, that's going to increase again. One of the things we talked a long time about is, and this is a suggestion from the property committee, completely removing the money in the line of the property spending plan, which in the past has been allocated towards special projects, which they've never spent because they said we haven't had the money to do it. But we can't keep doing that because we have to take care of this beautiful building that we spent so much money on. And so we're adding a separate amount for a capital improvement project, and we'll talk a little bit more about that in a minute. The ministry teams, instead of each one being allocated a certain amount of money, will share $5,000 as requests are made. If social ministry, for example, has a project that they want to work on and they need some money, they can tell us what it is, I'll pay their bill, and I will code it to social ministry when we pay the bill. So it's going to be kind of a pot of money that all the different ministry teams, most of the ministry teams, can pull from. So this is what the spending plan looks like for 2022. And I'll just point out a couple of things. The left-hand column is last year's budget. 2019 was a pre-COVID year. 2020 was the middle of COVID, or the start and then the middle of COVID, or the first part of COVID. And our expenses for 2021. So I don't normally put a previous year in to compare it to, but I had several people ask me what the changes were, or how much difference it was. It's kind of interesting to look at the bottom line, or the subtotal line. Expenses in the pre-COVID year and the COVID year were almost identical. I don't know how to explain that, but we still had to have the building open, we were still heating it, we were still paying salaries, so maybe that explains it in itself. So you'll notice the part that's in gray, they have numbers up until the last column. That's because for the coming year, we're looking at just giving them this $5,000 as a group. And then when people need it, they can just apply for it or ask or say, we're going to do this project. And I will give them the money to do that, as long as we have it. So the total amount there, before the capital improvement project is $457,000. By the way, the $455 on the left-hand column was the budget that we had for 2 years, because last year we did not change anything. We just kept everything the same and just moved it into a new year. So when we put in a capital improvement project, which property committee has already kind of decided what they want to do in the near future. It makes a total of $472,500. And you will have a copy of this when you leave. We have a copy that you can take with you of kind of a summary of everything that we're talking about today. What's happening with the projects designated in the capital appeal? At this point, I'm going to turn it over to Dan.
So let me give you a quick review on the capital appeal. We had our third capital appeal in the spring of 2019. It expires in June of 2022, okay? When we started the capital appeal back in 2019, we said we were going to do several things. One, we're going to pay down the mortgage. Two, we were going to complete 3 high-priced projects. So a quick update on that. Updating the sanctuary lighting, we did that. It's all LED, it's a little bit brighter, so hopefully you appreciate that. The bell tower roof repair and front step replacement are hopefully scheduled for this summer. There's a couple of reasons for that, that they haven't been done yet. One of them is COVID. It's hard to get people to talk to you. And the property committee actually did kind of a good meeting for the first part of COVID. So, and then the bell tower roof is going to be in conjunction with the steeple repair, which I'll tell you about in just a second. Just back one quick thing. We are holding $80,000 in an account for those other 2 projects, okay? So, the other thing that happened in 2019 is we had a huge hailstorm, and our steeple was damaged, and we spent about a year trying to get it fixed, and that proved to be really hard. So we're working in conjunction with the insurance company. The insurance company is paying for this, so it shouldn't be any money out of our pocket. But in the end, between us, we all just decided it's probably better just to replace the steeple. So you're going to see that happen. And again, no cost to Trinity, other than the deductible, which is covering the whole thing. But so sometime this summer, we're getting bids. We have engineers looking at it. There were several problems with it, so the insurance company said, let's just replace it. So when we're replacing it, that also becomes a very good time to do the bell tower roof leaking, because we'll have the equipment here. That will be our expense, but we'll save some money because the crane won't be duplicated, et cetera, et cetera. Okay? So what about the projects on the extensive list the property committee has? So the property committee did start meeting this fall and summer. We came up with a list of 20 long-term projects. And I'm not going to list all 20 of them because we don't have time, but we picked out 5 of them to put on this list that just kind of indicate the kind of a sample of what's out there. So the electrical panel update, we have a panel that needs replacing. It's about $15,000. That's actually on the 2022 spending plan. That's at $15,000 you saw at the bottom. And that is planned for this spring, but that's a code issue. We need to get everything up to code. The south parking lot, that's the one over there, it needs to be chip sealed. If we don't do it now, or within the next year or 2, we're gonna have to replace it. So, money well spent replacing that one. So that's maintenance. The slate roof has some cracks in it. We had a leak in the educational wing this summer. That has been sealed with a little bit of caulk, but it needs more than that, and there's enough of those. At some point we need to do that. Again, that's just maintenance. We need to take care of what we have. The next item on the list is cosmetic. That's a sample. I picked the carpet in the chapel because that's the one where people have to go in with glue and scissors and kind of cut everything off, and that's probably in the worst shape, but there's other flooring that needs replacing. And the north parking lot needs to be replaced, really. It's beyond repair. We did chip seal that a few years ago, but at some point it's bad enough. It's a safety issue. It's a cosmetic issue. It's the first thing people see when they come to our church. So it kind of ties everything in together. We just need to get it done. And we have no idea what that will cost, but it's maybe $500,000, I don't know. So, just a point, we need money. So, and then a quick mortgage review. Our original project in 2014, I believe, was $1.7 million. We took out a mortgage for 1.3. Beginning of this year, you can read the numbers, $352,000. We paid off 104, almost 105,000, averaging $8,700 a month. So sometimes higher, sometimes lower. That was our average payment in 2021. The remaining balance, we have $248,000 left. Okay. What else do we need to know about the mortgage? It's on the interest rate resets every 7 years. Our current rate is at 4%, which goes through August of 2027. It would be nice to have our mortgage paid off by then. Right now it's $248,000. The current capital appeal, as I said before, ends in June of 2022. May 31st is the end of that capital appeal. Our best estimates, and by that I mean Gail Cassidy's best estimate, and she's usually right, is that at the end of May we'll owe about $200,000. So, the question is, after June 1st, 2022, and let me just say, we're not making any decisions, that's in June, but we're trying to start a conversation. We have a need, we need to continue. So if you look, believe it or not, we still will have monthly payments that have to go out. If we make the minimum payment, which is a little over $2,300 a month, it's going to take over 6 years, a little over 6 years, to pay off the mortgage. The council currently recommends we pay $5,000 a month, and if we do that, we will be done in just about 3 years, paying off the mortgage.
I just want to comment for a minute on the minimum payment there. That will take us into a interest adjustment. Don't know if it would go up or down. Chances are it would go up. So just something to keep in mind as we talk about this.
So looking forward, how do we accomplish this? Our needs, we continue, our first thing, we need to continue to support our mission and our ministries identified in the spending plan. Those things aren't going away. We still need to give as we have been giving, probably a little more, because we seem to be shrinking a little bit our cash flow, or budgeted amount, but we need to do that. We need to pay off our mortgage in a timely manner, and we need to start raising money for capital improvement. All of these things are going to come due. So again, we're starting the conversation. There's no decisions to be made. We need to start talking about all of this. So to begin with, again, all these groups have been meeting, but we asked the congregation to consider regular and appeal giving as able into the summer of 2022 and beyond. So while the capital appeal ends on May 31st, if everybody keeps giving their capital appeal money as they did for the last 3 years, we're going to be okay. If they keep giving their operating general fund, whatever we call that other side, and maybe a little more, we're going to be okay. So if everybody just keeps giving, you know, we're going to make it. So our proposal, I'm going to skip down to the third one. The capital appeal money collected after June 31st could be spent, this is a proposal, could be spent with guidelines that the council will decide. So if we keep getting $8,700 a month, we could put a certain amount towards the premium, the mortgage payment, I'm sorry, and then the rest of it could go into a fund for improvement. So when we need to get something done, we have the money to do that. And that's a council decision, and it's all worth talking about here. We're starting the discussion. The middle paragraph there, middle sentence says that the capital appeal money will go in accordance with the current guidelines. So again, remember 2019, we said we're gonna use the money for 3 projects and pay it down the mortgage. Any money that comes in before June 1st will be spent in accordance with that appeal, because that's part of that appeal. This money after that the council would spend as they see appropriate. So, I think we're ready for questions. And I will be having a cup of coffee out here afterwards, so if it's still there, if you have any questions, feel free to go.
Mine's just a pretty quick one, and it's not even that much money, but I recall when I was on the foundation committee that there was money set aside specifically for the parking lot. Was that taken into consideration? Will that be rolled over to help with any parking lot?
It can be, yeah, so the foundation, the question is what, there's money in the foundation for parking lot, and I can't remember the dollar amount, but it's like $30,000 to $30,000. It's not $500,000, but yes, that would be used.
I got more of a comment. Not, I know the congregation, and maybe we need like a table talk or something about with giving pre-tax now with like your mandatory when you turn 70 and a half or 71 and a half.
RMD.
When you have to take those, what are they called? RMD.
RMD.
And where you can donate them to a nonprofit without having to pay tax on them. Maybe people in that age bracket, if they realize they can just do a lump sum instead of their weekly or monthly contribution, it would make it tax efficient, help the congregation get bigger lumps at a time. And I know it's a tax financial thing for every individual, but I don't know if everyone knows that.
Yeah, so I think everybody heard Michelle, but she's talking about the R&Ds where you can contribute money out of your IRAs or wherever. It comes in tax-free. We did have a person out here 3-4 years ago who spoke on that, and that was the first I had heard about it. And yeah, you have to be, I think, 70 and a half to, I'm not there yet. 72? 72? Okay, so I never really wanted to be older before, but I'm kind of there, so. But I think, I agree, we should have somebody out again to talk about that.
I just wanna add again, we really wanna focus on the 2022 spending plan questions, because we're gonna be voting on that next week. We are planning another meeting in 3 or 4 weeks to talk more in depth about the capital appeal and also the project improvement projects that are needed. We'll do that either between services or at the end of the services. So more to come on that. We just wanted to kind of plant the seeds, let you guys have discussions in your home, bring questions to us. Anyone on the financial committee, property committee, or the council can help answer questions. We just want to begin the dialogue as we move forward. So when June 1st comes into vision, it's not going to be a surprise that the capital appeal ended, but we still have mortgage payments.
Ken is handing out kind of a summary. This will also appear in the annual report. And there are a couple minor numbers that are changed on here, but they don't affect the total at the bottom. I had to recopy manually, and like I often do, I hit the decimal point instead of the 0, and so instead of $54.80, instead of $540, I got $54.80 or whatever. So they're minor, they don't mean anything. If you notice that what I have here isn't exactly, if you could find it, I'd probably give you a bonus. Anyway, so if you have questions on either the report or any of the presentation, feel free to contact one of the 3 of us or somebody, Gail, if you have a question on income. And how whatever she's doing with the money when she turns it over to me, because I have no say in that. She takes it in, I spend it.
Jim?
When they rebuilt the highway out there, we got money from the county to give us another access for that parking lot on the north side. When you said $500,000, does that include another exit and curb and gutter and everything, or is that just milling and overlay?
That's pretty good.
It's really complicated, so I'm gonna hand Josh the mic here.
Hello. If anyone and everyone was here when we completed the major project, the city requirements, Jim, would kick in for curb and gutter lighting, landscape islands. We would also have to increase the number of parking stalls that we currently have, because I'll call it snuck by with street parking, which, you know, isn't ideal, and that's a decision that the congregation needs to make if we want to continue to park on the street, safety-wise, or if we want to move all of our parking, you know, inboard. But as Dan mentioned too, part of it is the curb appeal, right? All the traffic is on the north side. You know, if you're here in the evenings, it's very dark in the parking lot, and a lot of ministry happens, you know, in the evenings, especially in the winter. So I think it's curb appeal, it's meeting the city ordinances, it's increasing parking stalls, so, and traffic flow and safety. So, and that, Jim, would go back to parking counts that we did like in 2012, 13 for the project. Did that answer your question, Jim?
Basically, it's gonna be a total rebuild.
Yes.
It's be larger and another access on the west, huh?
Could be. We also,
How
you know,
much did the county give us?
I'm not aware of that. That was pre-me.
Well, when we lost west access, when they changed the street, the county gave us money. You don't know how much it was, huh?
I do not.
Okay.
The other thing that would kick in too is stormwater control. So we'd end up with some type of retention or stormwater treatment on campus, so.
Okay, we're gonna go ahead and wrap this up, to get ready for the second service. Let me just end with saying thank you for your continued financial support. Prayerfully consider what was presented today. We will have more discussion next week during the annual meeting. We will have more time for questions at that time. And then again, look forward in 3 or 4 weeks to more to come on the property committee items. Thank you, everyone.
Thank you.
Just a couple of questions. Dan's gonna have coffee. I have to play balls in the second service.